Bitcoin just flashed a signal that most retail traders are completely ignoring, and it is creating a massive bull trap for XRP, Ethereum, and Solana, among other major market cap cryptos. So while the crowd is buying the dip, the underlying volume reveals a far more dangerous reality that suggests that this recovery that we recently witnessed is actually more of a calculated retrace that might get more bloody. We are seeing a consistent resistance at the 70,600 level on Bitcoin, and the structural data suggests that we could be looking at a 40% correction down to at least $42,000 and potentially even lower, which will carry the rest of the crypto market with it. Things like XRP could easily go under $1. And if you're an XRP holder, that can be pretty scary, considering you would have seen virtually all of your gains over the last year and a half get wiped out. Now, this isn't just a guess, it is a clinical breakdown in the trend that matches the exact patterns we've seen at every major market top before a significant puke, something I've covered on the channel over the last week. Well, today I'm pulling back the curtain on my latest Altcoin Pro University technical analysis call to show you the specific indicators that have me personally betting to the downside for the crypto market. You need to watch this entire breakdown because I'm going to reveal the line in the sand and some exact price levels that determine if we survive this range or witness a total collapse of your favorite altcoins that you may have invested into. I'll also be covering how to use the Fibonacci tool simply and effectively to get price targets. And before we dive into the charts, if over the last few months you've felt frustrated, maybe you've been buying tops or panic selling bottoms, getting chopped to pieces by fake outs in the market, don't worry, you're not alone. A lot of people have been experiencing that, and ultimately this is what the market is designed to do. It punishes amateurs, it punishes emotion, because most crypto investors rely on how they feel, or they rely on info, the fundamentals that they pull from a YouTube video or a Twitter post in order to invest. Then once they invest, they hope the price goes up in order to see profit. But if you've been in the market for any period of time over the last year now, you know that's not how things work, which is why we created the accelerator program. It's not just signals, it's not hype. This is your blueprint, a step-by-step framework to help you profit and protect your capital in all markets and environments. Whether the market is breaking out, breaking down, or ranging, you can earn yield by holding whatever it is that you hold in your crypto portfolio. If it's stable coins, awesome. If it's cryptos, even better if you accumulate into new lows. This blueprint is your life raft, and many of our accelerator clients are currently taking advantage of these plays right now. For example, here is one pool that is netting 70.66% average APR per year. If you were to sit on and hold XRP and USDT, the stable coin, and although 70% is not realistic for the entire year, on average, our clients take advantage of these pools between a week to a month at a time. And those gains really add up. In other words, this APR is based on the previous 7 days of swap fees and obviously doesn't guarantee any future gains or results, but these types of things are readily available and you can take advantage of them very simply and effectively using our blueprint, which makes complex things very simple. And not only will you learn how to safely earn consistent yield, but we also teach you how to analyze the market, choose setups in cryptos with proven strategies to execute when we get clear validation that you can see and feel. In other words, you can improve your crypto portfolio's performance by applying to get this blueprint in as little as an hour to 2 hours per week, because we also designed this program with the busy person in mind. So if you're serious about upgrading your process, apply right now by going to the link in the description or the pinned comment below at accelerator.altcoinpro.com, and be sure to watch this video, then apply today, because spots are limited and we're currently booked out. So if you don't see any availability on the application, be sure to check back in 24 hours. Sometimes a few spots will open up. But click on that link below. And as always, my friend, if you're feeling blessed and bullish, comment 777. And if you're going to be the wealthiest person in your family tree, smash the subscribe button. So you can see that on The 13th, right? The market, or the stock market, better yet, the S&P 500 was sitting at about 6,800. On open, we dumped down to a low of about 67.7, and we're immediately bought back up. So that's kind of a good sign. It's not a sign that there's strength. It's just not a sign that we're ready to puke just yet. But I do believe that if the market opened, a lot lower, that would have played a major role in the crypto market. So over the last, let's go into, I'll keep it on macro because I do believe I have Bitcoin on here somewhere. Where are you? There you are. You can see that on the 17th, right? Bitcoin also rallied with the stock market and then sold back off, currently sitting at 67. So we've kind of been just playing with this range. I mean, I'm on an hourly time frame here, playing in this range since the dump in lows on February 5th. One thing you'll start to note, okay, as you look at different crypto charts. So let me just go ahead and go to a different watch list here on a Bitcoin, right? We've seen pretty consistent resistance at the 70,600 level. Over and over and over again, we're getting wicks into this range. And the last time that we were trying to rally for a breakup, as you can see, this bullish engulfing candle right here. And this is why I'm kind of just sitting on my hands. I'm not making a bunch of trades right now unless you're using a ton of leverage and trading on a very short time frame. But this call, you're not gonna, you'll get the bit, you could probably apply a lot of this stuff, but this call's more for those who are investing, maybe swing trading, not hyperactive, trading with loads of leverage type stuff, because otherwise you're just going to get bored, impatient. You're going to sit in a trade for too long. You're not going to make money. It can be discouraging. So I actually like to wait for breakouts or breakdowns more often than not when I'm placing trades. Whether I'm buying into weakness or strength depends on how I see the market responding and reacting into certain ranges. But here's what we did see, right? We saw Bitcoin rally on this right here, this bullish engulfing candle. Let's see if the volume confirmed anything. And as you can see, volume at that moment in time was actually really weak. So this guy right here led me to believe, although it is a nice bullish engulfing candle on a daily time frame, this is not a rally to buy. Because not only are we still below our range resistance that occurred over 1, 2, 3, 4, 5 days, um, but volume was very weak there. So more often than not, this actually looks to me like a retrace. It's just retracing the range, needs more time before it breaks down for new lows. Volume really would have helped you to see that. Then you rally right back up to the range resistance, and this is where things get interesting. If we come to that, let's say hourly time frame. Actually, first, here's what I like to do. This is why I like favoriting drawing tools, by the way. I have a lot over here. You don't need all of these. You just need the basics. Go to technical analysis, essentials, and watch that on drawing tools. Okay. One of those drawing tools I use often is the vertical line. So I'm going to place it right there on that day. And it helps me when I zoom in to a 30-minute time frame or an hour time frame to find it on the chart a lot more easily. So let me go ahead and just click auto. So now you can see it's filling the space here. I also click auto on volume because sometimes it just bugs me if it's not proper and doesn't look good. And I can't just look at the chart more easily. Okay, and I'm going to zoom into where that occurred. And as you can see here in this moment in time, so right here, let's just put a horizontal resistance line there. I'm just drawing it randomly. Okay, I can drag that wherever I'd like. You guys know how to do this, or at least you should. And you can see that this looks to be a pretty strong resistance right here. Okay, so once the market started rallying, and by the way, this is the open of that day. Let me move this out of the way. You can see that my line started at 0, 0. Okay, like the next candle was literally what, 30 minutes in at the close, right? Then the next 30 minutes. Now, just as a quick refresher, either for those of you guys who are new, when I'm looking at this, 3:30 a.m. Time frame, I'm not looking at Pacific Standard Time. I'm not looking at Eastern Time. I'm looking at Universal Time, because crypto trades 24/7. It's impossible. Who's right? What's the proper close on a candle, right? I would argue, and I would think the majority of people that do trade and invest in crypto use just a universal time zone. And in this case, we are now 14 or 15 minutes into the next day. So you can do the math from your time zone, but I just keep it there. So I know that this is essentially 30 minutes into UTC. This was the open, and the close is somewhere over, let's find it, right? I believe here. Bam. Okay, so like right here, the candle right next to this one. So this is technically the close, but I'm just covering the bases. And you'll notice that the moment we actually rallied up into this range here, okay, we immediately sold back off. Now, what are we noticing here? Okay, here's something interesting. You can see the volume, and this is why volume is even helpful on smaller time frames. What's occurring with the volume? First and foremost, I know one thing. We have a decent amount of resistance up here. Okay. And you could really argue just between these ranges right here. So we have a lot of trading that occurred into the range and immediately sold off between 71,100 down to $70,800. Do you see that? Okay, so you can use a box tool, you can use horizontal lines, doesn't really matter. But what I did notice is that when we did rally into that range resistance, we immediately saw a ton of sell volume pick up. Do you see the volume here? Loads of volume into a range resistance before we even touched it, really. Then the actual time we touched it, look at volume kind of rallied just slightly to the buy side. Okay, but notice how weak this is relative to the prior major candles here, including the buy volume, right, on the little dips right here. So notice buy volume is far smaller on average. Okay. Sell volume is far greater on average into the range here. And then look at how volume picked up to the sell side into, right, a resistance. Do you see how volume picked up, sold off at that resistance and broke for what? A new range low. You could, and by the way, this stuff works on smaller time frames, larger time frames. It's just, more often than not, people get impatient trading on these short time frames of their day trading, and so they make all sorts of mistakes. They don't trust their analysis, their gut. Maybe they feel it and they're like, oh, I get out because I can't see the drawdown, whatever the case may be. But notice right here, right? This was our new higher low. We had a higher high here. We had a higher low here, higher high here. Do you see this? This is a little trend. What happened right here? Notice the breakdown? Breakdown in the trend. And now new, what? Lower low to the prior range low. On what? Volume increased into the sell-off. So this alone tells me, oh wow, this thing's actually kind of weak. We couldn't even rally for a maybe, a what I would call a bear trap. More often than not, that's what I call it. Other people call it different things, but the way that I look at it, or excuse me, a bull trap. I don't know why I said bear trap. A bull trap is essentially where the market will rally for a new high into just above the prior range highs. And up here, a bunch of people potentially get bullish because they're like, look, we're breaking out. And that happens to me too. It's totally fine as long as the volume confirms it. I have real confidence. If the volume doesn't confirm that move, and I don't see a growth or an expansion in volume, which is usually indicative of institutional activity or buying, they can move more money. And also think about it this way, right? Into those new highs, guess what? There's also a lot of activity around selling. Some people wait for that high in order to go and sell. And so when you think about it in that way, if the breakout actually occurs and we close into that range on a lot of selling as well, that leads me to believe that this is actually a strong breakout, that the buyers are in control, that the buyers are going to be able to support all of that selling and actually overtake it. So that's why I like seeing increased volume. Volume is I can't stress this enough, how extremely important volume is for traders. Arguably more important than any indicator out there. Okay. Now I know this is looking like a messy chart, but this right here would be a potential bull trap if the market immediately reversed and came back below the range resistance. What used to be a resistance should become a support. But when you start to break down like this, well back into, your local trading range, that's not healthy. So guess what? Anyone that was bullish up here is immediately trapped into a losing position. And more often than not, people that don't have good risk management, they don't have a plan, they'll sit in that position waiting for the market to get back there to either break even or be in profit because they're like, the market has to go there and they're like, I'm not going to sell at a loss. And one of the stupidest things you could ever have, one of the biggest fallacies that anyone could believe, is this one phrase that I don't know how it made its way into trading circles, but I kind of like it because that means there's enough people that don't know what they're doing, so you can take their money. Okay, this is one of those things where they say you don't lose until you sell. That's not at all true. The moment your account is in a drawdown or a loss, you've lost money. Just because you didn't sell does not mean you're not in the loss. And just because it's down doesn't mean it can't go down more. On the flip side, right? Just because it's up doesn't mean it can't go up more. But this is such a fallacy that when people believe it, they hold on too long and let a small loss turn into a major loss, and it's extremely difficult to come back from. And what you really lost is time and confidence, right? A lot of these people have, misplaced confidence. But anytime you're in a loss, you've lost. The question is, do you want to cut your loss fast, right? And small, or do you want to wait for it to potentially turn into a greater loss that's harder to come back from? Right. So that said, I see this type of stuff all the time. But look at this, even into this range right here. Now we're back below. Let me remove all this stuff and just put a box up here again. So now that we're back into a range resistance here and sold off immediately, we didn't even have enough strength to pump up into the 72,000 range for a bull trap. Look at this. Look at what occurs here. Growth and expansion in what? Sell volume back into the range. Okay. So this thing is following the stock market. And I guess where I get a little bit more worried about how low we're going to go, and it doesn't worry me necessarily because I'll make money on the way down. You should too. It's just that, we are no longer ever going to look like we did in the past in terms of cycles. These cycles are starting to fan out. They're typically probably going to take more time. They're going to give us, on average, probably less returns. The lows are going to be deeper on this bear market relative to the lows on the last bear market. Okay. And so looking at this, Bitcoin chilling at 67.5, down almost 50%, between 45 to 50% at any given time from its prior all-time high versus something like, the S&P, literally within a few percentage points of its all-time high, when and trading very correlated, when the stock market does kind of eventually puke, it's going to occur on crypto as well. It's just a nasty reality that we're in, which means, I really don't think it's far-fetched to see a Bitcoin dump another, I don't know about 50%, but 30, 40% from here, down to 42,000 and under. And when that occurs, I mean, you could look, we'll go ahead and do this. The majority of altcoins are going to be down 99%. And just as a quick side note, if your favorite altcoin is down 99%, you picked a loser. It's not a good altcoin. Okay? That does not mean, oh, it's cheap, now let me buy. Because it can stay down there a long period of time. Now, I will also add a caveat to that some of them, right, when Bitcoin finally recovers and they've just been slammed into the dirt, they're going to see some fun little relief rallies for a couple 100%. So if you're going to toss a few clips at these things, we'll look at them here in a second. Um, do it with truly money that you can afford to lose, or just never see turn into anything at all. Or you're okay with 500 bucks turning into 200 bucks and then selling for a loss. Does that make sense? Because then if you see, 500 bucks turn into like 1500, awesome. Who cares? But also understand that just because you're up on those, you need to have a game plan for when you're going to take profit and not shoot, kick yourself in the shin for let's say taking profit too early and it rallies for another 100%, right? Just be happy with your gains because a lot of these they'll do a relief rally, but then they're immediately going to sell right back off into very low ranges again. And they will never make a comeback to the prior all-time high that they saw in the previous cycle, or the high that they saw in 2021, 2020, 5, whatever the case may be. And that is the new environment that we're in. So that said, what I'm seeing on the stock market is that, realistically, this is not looking good. This really truly looks like we've rolled over. And this is the exact same pattern we showed you on hype, and it's the exact same pattern you'll start to recognize in markets that have topped off. Okay, a lot of the times a larger EMA or an SMA will start to, instead of trending slowly to the upside, will start to curve and then put in its top, and then you'll start to notice it trend a little bit down while the market's kind of hanging in a range. That's a very good indicator that the thing is likely done, especially if it's below that SMA EMA, which again we can look at. But looking at the stock market, this looks pretty rolled over. It looks like it's really struggling to rally for new highs off of this prior high at 7,000 yet again, and for the third time retesting the 67 range. Looking at the QQQ, I would argue even looking weaker relative to the S&P. Then you have laggards like the Dow Jones and the Russell. Okay, things that have typically lagged these leading indexes are now starting to rally and pump for highs. You see the exact same thing occur in crypto. It's actually kind of funny. You would see Bitcoin in the earlier days rally for new all-time highs. Then you would see the altcoin market, a rotation of profits from those into altcoins that were laggards, and those would rally closer to the end of a market cycle. And then they would all dump in unison while Bitcoin had already topped off and started its downtrend. Um, I'm seeing this in the stock market. We've seen unemployment consistently rising now. We just saw a new revision, which I covered in a prior video, on jobs, right? Another 1 million job revision to the downside. And so across the board, I'm seeing relative weakness. And I think, again, as I stated in the last call, that crypto is a leading indicator. Okay, crypto is going to trade into these ranges before everything else, which also leads me to believe it's going to bottom out before everything else. Okay. So like by the time the stock market is starting to dump into, new lows or make its low, Bitcoin has already bottomed and started building up a base and probably starting to put in a few new little local highs. When we see those, we're going to want to take advantage of them big time. Okay. And arguably, if you're investing into a Bitcoin, or any crypto for that matter, anytime you're down, in this case, probably 60 plus percent, right? If you want a dollar cost average over the rest of the bear market, I think that's pretty wise, right? But also remembering that like you could run out of capital if you overdo it and you won't have access to any more for when a real bottom occurs if you overdo it. So be wise about how you do it, keep your emotions out of it, and just have a game plan. If I have 20,000 I want to invest into a Bitcoin, right? And this bear market lasts a year, right? I'm doing weekly. How much of that should I do every single week? Okay. And I think that maybe is a better approach, where I would really be more bullish and want to start buying heavily. Okay. And I'm saying really like if I'm still sitting on a ton of cash and the bottom's already occurred, right? I'd start buying on a breakout above a prior range, what? High. So if you notice, right, trend is down here. Where did we officially start a new trend? Right around here. And arguably the real confirmation occurred here. So right here, this could have been a double top, right? You have a range high here. And you notice how we have lower range highs, right? Lower highs essentially. Okay, we have lower lows. Okay, we've covered this. Okay, so this is just basic trend stuff. Uh, but here's the point. This seems to be a pretty strong range high. Okay, because we did see range resistance right there and immediately selling back down. So where you really would have had confirmation that this is a new uptrend is not on the first rally back into the range, because it's possible we could have just gone lower and seen a double top here. Okay. Where we really had it is now we have at least 4 points of data. So what do we have here? Okay. Low. Okay. Highs. New higher low. And guess what? For the first time above these two highs, higher highs. Any of these really, this whole area right here. So this is really where I'm like, this trend has changed. Even if we dump back down here to 23, this should act as a what? Support. And if it doesn't, get out. It's okay. Like protect yourself. Those types of traps can occur. Macro, economically, the environment might change. We might see a new black swan event type issue. So it's really important that you do manage your risk and don't overdo it. If I was tossing, let's say, a couple $100 every week or whatever, and this week, because of the confirmation in the breakout, I said 500, right? If from an investment standpoint, it's fine. But if it broke down here, I would go back to $200 a week. If I was in a swing trade, I'm cutting my loss right there. Okay. Like completely. So it's like having your game plan and approach and a strategy for these types of situations, which can occur because the market is very variable and dynamic. Let me remove that. So this right here would have been your confirmation that you're in a new trend, and you would have been very happy, by the way, right? Buying at an average of 28 all the way up to 120. That's insane. That's really good. Okay. We're just used to seeing such big percentage gains and people pretending like they're all millionaires in crypto that we're not happy with a gain like that. But that is a really insane gain. That's 400% in like 2 years. Okay. That's huge. No hedge fund is returning that. And it's usually because of they're heavily diversified. They're actually harming their gains by diversification. So another principle that I like to share is I actually like to buy winners. I put most of my money into winners. I don't over diversify, right? In other words, concentrations for building wealth, diversifications for protecting it. Another one of those things. It's like you have to have a game plan for. Okay. So that said, here's the point I'm trying to make in this specific situation. Look at how volume has really dried up. Okay. It looks like we're going to build a base. It arguably feels like, and I don't want it to look like this, it feels like we're in this phase right here from 2022. Okay. In similar fashion, let's go ahead and replay through here. Do you see how we had this nasty dump picked up in volume right around here? You notice how, so like we're kind of in this area in this phase right here where the market took about a week, 2 weeks to kind of just rally, tried to retest its prior range highs, immediately sold back off. Volume is drying up. We're consistently playing in this little short term basing area, okay, for like a rectangle pattern. Okay. And then what occurs right here? You start to see volume really dry up and then starts picking up to the downside. Into a situation like this, I am shorting. Period. Why? Trend is down. Volume is picking up into the weakness that I want to see into a short position. Notice I'm not shorting up here at 31. Oh, well, that's stupid. Why short there? Why not short there when you could, instead of waiting for 28? Because why would I short into strength? Right? Now, if it was really, really weak volume or I saw like a bull trap, then perfect. With a little bit of a pickup in volume to the downside, perfect. But in this case, look at volume is picking up into the weakness I want to see. So even if you have to wait a few days, as long as your stop loss isn't stupid tight or just above the prior range highs without, risking too much of your capital, like you're in a good position there. I don't have to be stopped out at all, right? And let me go ahead and play this out. And notice, look at this bull trap. Perfect. Okay. So what do we see here? Look, volume picked up here, short there. Guess where you stopped out? Right here. Fine. Imagine you lose 1% of your portfolio on that. Where am I shorting again? Right here. Bull trap. Right here. So now my short position's at 29. I lost 1% for potential to make far more. This happens all the time, guys. The market's like this. It's like there's no easy way to make money in the market. There's no one way to predict that this couldn't occur. And what's funny is it didn't have to. It just did this time. Sometimes it really does play out like this, and the market just keeps dumping lower. This is why also I'm just a little bit patient because I've noticed, and this is something you learn just with time in the market. I've noticed more often than not after a major dump like this and a puke, okay, the market usually hangs out for a few weeks at least and builds a base, which is why I've been sitting on my hands. I don't need to enter a ton of positions and pay fees to be stopped out. Sometimes it pays to wait, to sit on your hands. And when you see a bull trap like this, it's not a bad time to enter. It's similar fashion. We saw it over here. Little bull trap, major breakdown. We saw that exact same thing just play out. So for me, it's like if this played out almost exactly the same, that'd be quite impressive, right? Like, let me go ahead and drag this over. You know, it's funny. You could short here. You could re-short right here. Where's your stop loss? Just above that prior range high. Okay. And look, right into this range here, break for new range lows here, back into the bottom, short either here or here. If you want to be a little bit impatient, and bam, beautiful little play. Okay. And so then you can wait, to see where does this market take me. You can sit in this position. I mean, it depends on your time frame, what you're trading with. There's so many variables, but what I would say is more often than not, after I see the market puke like this and major volume pick up to the downside, I'll wait to see where do the dip buyers really step in, where are they able to support the market. You'll notice right here, loads of dip buying, right? But look at this. And this is what's helpful when you look, even without the volume. Okay. Let's replay to here. After that first breakdown right here, do you see this guy right here? Notice how like it's a really big wick to the downside. Loads of dip buying occurred at 20,000. However, we didn't see a wick to the upside. We didn't see anything really confirm that we had enough strength in the market to at least get us back up to even the midline of the big red candle here. So to me, it's like this doesn't look like it's over just yet. Maybe sitting in that position and having the courage to watch maybe a very large short turn into a little bit less profit for the potential that this thing continues dumping. You don't know if that's going to occur, but if the market started basing out here, I'd get out of that position. Okay. But the first puke, more often than not, the first real dump, it just usually continues or leads to further lows. So we played out one more and there's your candle. Okay, massive bearish engulfing, really struggling to get back up there. Couldn't even, retrace half of this candle right here. Played out again. Look at the size of this candle. Yes, it looks like now maybe you might have a support at 20. Very weak buying, and immediately all the buyers were immediately beat, or the bulls were beat in this war for this candle, and immediately sold right back off to 20. And there it happens. Okay. So, like, by the way, once you do start to see, okay, you just can consistently see this occur, maybe third time, second, third time, I usually start to look at taking profits. So, and again, this is just a gut thing. It's a thing when you look at enough charts and you've seen this play out 3, 4 times, you're like, I'm getting it now. Okay. But like on this one, I'd be more apt to take a bit of profit after that maybe second dump. And then right here, look at this. Now, this is more interesting to me. What are we seeing here? A body, okay, that is equally big, if not bigger, than the prior candle with a wick that comes what? Into a higher low. Do you see that? So this right here, now look, this is where it's like interesting. This is now, if you didn't take a little bit of profit here, that's fine. Maybe here you do. Does that make sense, guys? Because look at the candle. I didn't need a million different tools. I needed to learn how to look at a candle. Okay. Let's play it out one more time. Interesting. Higher high, no new lows. Interesting. Higher high, no new lows. Whatever was sold off immediately got bought back up. So here I'd be even more apt to take a little bit of profit off the table or all of my profit off the table if you weren't already. So that said, okay, we only spent how many weeks here? From May 9th all the way into June 12th, so like a month, June 11th, okay? Like a month here. And it's possible that we could see something similar to that this next time. So let me X this out and leave. Also, what time are we? 4:39. Okay. So notice how like little time we've spent here so far. Okay. We have a nice little McDonald's shaped pattern here, right? A nice little M-shaped pattern. I think we could probably break for a new little low right here at 64, pump back up, maybe bull trap some people at 72, come back down. But I also want you to know and look for anything that is rallying a little bit harder, usually because of less liquidity or actual desire or demand in the market, I should say. I hope you're enjoying the video so far. Wanted to take a quick moment to let you know that you can get a $100 funding bonus when you sign up for a new account at iTrust Capital through the link in our description or pinned comment below, where you can not only buy and sell crypto, but you can also buy and sell gold and silver. And this platform is wonderful because you can start or roll over an IRA or a Roth IRA account onto the platform that charges no monthly fees and the costs are extremely low. They've been featured on Forbes, Barron, Bloomberg, Cointelegraph, CoinDesk, and more. You can buy all of your major cryptos inside of your Roth IRA account, completely self-managed, held off of their balance sheet one for one, which means you are truly in control. Things like Bitcoin, Ethereum, XRP, AI tokens, infrastructure tokens, real-world asset tokens, and the list goes on. So be sure to check that link out in the description below, and let's get back into the video. Okay. But in this situation, Bitcoin couldn't even rally. Whereas if you look at, I don't know, let's look, right? Ethereum couldn't rally. XRP, maybe a market maker, came in and really pushed that thing up to above its prior range resistance here. And it's now chilling here. But if Bitcoin breaks down, this thing's going to as well. So at 147, I wouldn't be looking for any dip buying or deals. I want to see strength on Bitcoin before I'm buying these guys. Okay, because this thing is now, in the reality is it's just below a major range resistance. So even up to 180, I'm looking to sell. I'm not looking to dip buy. Okay. Look, I would look for anything that's looking a little bit stronger though than the rest of the market if you're looking for products or opportunities to accumulate cryptos. For example, right now, Canton looks really good relative to the rest of the market. Okay. You don't even have to ask me why. Go and talk to our coaches, but the chart is telling me that. So now you want a fundamental picture? Perfect. Go find it. But the reality is this just looks way stronger on all the dips even. So that leads me to believe there's actual demand there. Do I know why? Not really. But I know, I mean, realistically, right? I kind of know some of it. But the chart is like, wow, even when everything is dumping hard off of its high, think about it this way. Relatively speaking, Bitcoin being 45% off its high, this guy is 15, 16% off its high. That is indicative of demand or a really strong market maker that does not want this thing to go down. Now, eventually, market makers lose that war because the market is greater and stronger than any one market maker. But as things stand, it looks like there's demand here. Okay. And there's very few of these right now in the market. So looking for those is actually kind of nice and important. Um, let's get into fib a little bit. Okay. How many of you know anything at all about the fib? Maybe you went through the technical analysis. I just need a little bit of help here. Like, where do I start? I do want to cover a few numbers, and maybe we can go from there. And then I'll answer a question or two, and then we'll hop off on time. But um, let's come into the sequence first, okay? So the way that we get to these numbers here, you'll notice that this is kind of like the golden ratio, okay? Which is usually 61.8% of anything. In other words, this 13, this box right here is 61% of this size right here, this 21 box, if you will. Okay, the 8 is 61% of the 13. The 5 is 61% of this guy. Okay, and so if you were to draw like one of those, spiral shapes that you see from the Fibonacci sequence anywhere, that's where this occurs. So a lot of people like to use those numbers and levels inside of their trading because they think and this is kind of the theory, it's universal. You see it everywhere in nature. It's a pattern. And so this is why I don't love this because I think a lot of people overemphasize the value of something like this in a very volatile and irrational market. Markets are not rational. And so, because we like to seek and see patterns and order, we will go and then find them or make them on a chart to validate our trade ideas. I don't overemphasize any of that. And so what I found is sometimes it works, sometimes it doesn't. Some models work and then they don't. Um, and so you have to be very dynamic. I think one of the best things that you can learn that'll help you long term in markets is being, what's the word I'm looking for? Optimistically pessimistic, right? So like if you could actually just be an optimist about your approach, like I'm gonna win here, I'm gonna do well, but pessimistic enough that if it didn't, you're okay being wrong and saying, ah, I'll give it up. I can move on, I can be dynamic. I can shift with the market as the market shifts. Because I'm telling you, people that only trade by this, I don't know, man. Like you could find something that works, but I feel like they're looking to create a pattern out of it versus just the market is the market. And so this is why I like the fundamentals most. This said, okay, I do believe that there is value here. I'll put it that way. I do believe there's value here, and here's how we get to these numbers. I use these for EMAs. So the way this works is this, okay? You're dividing all of these numbers by each other to get certain points. So if I divide the 5 by the 13, I get a point on the fib. If I divide the 5 by the 21, I get another point on the fib. It's a percentage of, okay? How you get the fib sequence is this. 0 is the first number in the sequence. What's the next number in any sequence after 0? If you just learned how to count as a baby, okay? 0, then there's 1. Okay. Now, the only difference is you'll notice if you didn't go from 1 to 2 to 3 to 5, what's that? No, there's a 4 between there. So all it's doing is adding the numbers in next in the sequence. So 1 plus 1. So if you add 0 plus 1, what does that get you to? 1. If you add 1 plus 1, what does that get you to? 2. If you add 2 plus 1, what does that get you to? 3. Okay. If you add 3 plus 2, there it is. 5. 3 plus 5, 8. So a lot of people actually use these as EMAs. There's EMA tools out there for you. You could probably right now go to your indicators and type in fib EMA. And let's just see what pops up. I'm already seeing fib EMAs slash MAs. Let's click on it. And you see all those ridiculous lines. Let's turn a few off. So you just find it on the side and you'll notice 13 is there. 21, 34, 55. These are all fib numbers. I'm gonna turn the rest off because this person's ridiculous for making this. And we'll just leave the SMAs. Okay, you can do EMAs. Screw it. We'll do EMAs. That's what everyone usually uses. Okay, let's turn off the others. So now you can actually save this on your chart. Not that I recommend it. I'm just showing you. Okay, so we got 4 fibs right here, and we should have 4 lines. And you'll notice, right, that the closest one is obviously your 13, your 21, your 34, and I believe your 55. Okay. That's how people use the fib sequence for EMAs. I personally really like the 21 to 34. I think those are great. 55 as well, but at that point, I'm just going to use the 50 because the majority of the market uses what? A 200, a 50, a 100, right? 21's so close to 20, it doesn't even matter. And so that's how you come to that. Okay. In the same manner, if I were to take, and we could do the math right here, but like I'll do it on my phone because I really don't want to find a calculator or type it in. If you take, let's say, one of those fib numbers, let's just go with 8, okay, which is a fib number, and divide that by 13. Here, 8 divided by 13. I get what? About 61%. Okay. If I do, let's say 13 divided by 21, what do I get? About 61%. The average is always about 61.5 to 8%, 9% in those range. So just 61.8 is an average number that they use. Okay. And it consistently shows that as you go down the line. It's interesting. But if I go, for example, let's say, I don't know, that 8 divided by 21, notice now I get 0.38 or 38%. That shows up on the fib tool. Okay. If I get, 13, divide that. What's after 21, or excuse me, 21, we got 34. If I do that exact same thing, I'm going to get 38%. Then there's 55. Watch this. 13 divided by 55 equals 23%. Now you'll notice when I pull up the fib tool, which is 1, 2, 3 down right here, fib retrace. Okay. And I take it from, and this is, again, this is why it gets theoretical. You can do bottoms of wicks, you can do the bottom of the close, it really depends. But I'm grabbing the tool now, okay, and dragging it from, let's just do the bottom of the wick to the top of the wick of a major move. This guy right here. And you'll notice as I drag it over all the way here, before we actually started bouncing for new highs, look at this, 38%, 23%, 5 is just a half. It's 50%. That's just kind of tossed on there, but that's not a fib number. Then there's 61. And now I added 0.65, 0.71. I've noticed that a lot of the times markets or market makers will move crypto, or not even a crypto, just any asset past those ranges. So I actually add that. I just double click it and I come in here and I change some of these numbers, turn them off, add 0.71 randomly in there. I don't even know where my 0.65 is, but it's somewhere in here. Shoot. Right here. So like you'll see I just added it somewhere in there. Okay? And it's going to show up right on my chart. I also make sure, just as a side note, for those of you guys who want to use a tool like this, um, I always put my values on the right and I always remove the background because this background is really annoying. Like, I don't like this stuff on my chart. It's just, why do I have to look at that? I just want it to be very clean and I want the labels to be on the right hand side so they're not inside of the chart. Because if I do left, right, it's kind of always over portions of the chart and I just don't like that. I like dragging it and being able to see the values very simply. So I think that should be baseline, but that's kind of funny. Also, really quick side note. Fib levels based on a log scale always needs to be on if you're using a log. Okay. Make sure you have fib levels based on a log scale. It will change. Notice the levels are changing over here. Let me move this. Look at the levels changing when I click it on and off because I'm on a log scale. I always use a log scale in crypto. So I just, yeah, make sure you have that clicked on and I can click and save it as a base. Okay. So anytime I pull it up, it's always going to look like this. You'll notice that for whatever reason, it just kind of respected this range here, 38%. But here's the problem. You can't always be hunting for 38% retrace, a 50% retrace, a 61% retrace, because sometimes that won't occur. Sometimes it goes deeper. This is why you got to be cautious with how you use a tool like this. Just because you saw it occur here once doesn't mean that it's going to happen again either. Okay. Here's what this tells me though. This is why I like this tool sometimes. It gives me data and it gives me points. If we retrace down to 61% on this, let's assume, okay, we don't know where this is going to go. It went from 5 pennies all the way up to 17, 18 cents. And now we're starting to see it sell off. Okay. And it's in this range here. And for whatever reason, it continues breaking down. By the time it gets to the 618 to the 78 in this range here of like 8 cents down to like 7 cents, that sounds more attractive to me, right? If I believe that this is a very strong crypto that's going to continue trending to the upside, right? So, but if I see it immediately bounce and retrace from here and start pumping for new highs at 38%, that's another really good indicator that there's major strength. I typically like it when this occurs more because there's strength behind this. Dip buyers are not willing to allow, or better yet, whoever's trying to buy this crypto doesn't want to allow for it to break down further. So for them, 11 cents is cheap. And that's where it was supported. Okay. You'll notice now, you could do all sorts of things. Now I'm just going to cover this very basically. I'm going to do, let's go to Bitcoin. Let's just see. Okay. I'm not going to use I know there's multiple. So there's the fib trend-based fib extension. I don't use that as much. Not that you can't, I don't want to train on it right now. It's just, this is a whole course, if you will. Let's remove this. Okay. Sometimes I will take the fib tool and just flip it the other way. So if I'm like, let's do something different. Let's go to this guy right here. Let's go to the index. Okay. So what I'll do to find maybe give myself a perspective on what could potentially happen the next cycle based on previous cycles is very helpful. What you can do is take the fib tool from the top of an all-time high and drag it to the bottom of the major lows, right? To see what occurred. So this is how I use this tool simply. Okay. If I take and drag the tool from the very top of the prior high right here down to these lows right here. Okay. Try to touch as many points as possible. Maybe sometimes you can ignore one stupid, crazy wick of a weird event and just focus on a lot of where the price action, spiked through or two. And you'll notice that this tool extended, right? We had a nice extended move for at least 2272. So this is a very big gain, okay, relative to maybe our current environment, right? So I'm not going to expect a move this big next time. because as I've told you, right, percentages wise, things are fanning out. So it's just we're not moving as strong as we used to. But this is good to know. So maybe next time I'd be looking for a two, a move to the number two, okay, on the fib tool. Let me delete it. Let's come to this one now and let's see what occurred. So, and if we're seeing bigger moves or equal moves every single cycle, two cycles, you're like, yeah, maybe it'll happen a third time, right? It's a little bit helpful. It's not perfect, but it's helpful. From this guy to the bottom. Okay, good enough. And you'll notice, look at this. Didn't even get to the two. It only got to the 1618. Okay, interesting. So less strength this time than I expected. Okay, good to know. Let's see if we got the 618 again. This one. We don't know, but we know where the top is now. Okay, let's find out. From that high to the low. Interesting. Do you guys see that? We did fan out. We only hit the 141. So this is how I would use a tool like this sometimes. It's helpful, which means maybe the next cycle we get like a 1 to the 1 2. Okay. So if the bottom, let's just make something up here, right? Let's assume that the bottom really does come in at like 30, 36, 37. So I'll just make up this is very theoretical, which is again why, but let's just assume we're in the future and now it's going to go there. If I had a price target for the next cycle based on what we're seeing over and over and over again, right? From this top down to the bottom, which by the way, I don't even know what percentage down that would be from that top, and I'll do it perfect, but let's just look. Yeah, that's like 70%. That sounds right. Okay. So from this top, and maybe it's fanned out, it takes a while, right? So it's like way over here, whatever. Okay. Where would that next cycle high potentially be? 175 to 2, right? Probably 175. It would really suck if we just did, a one-to-one move. At that point, I'd be like, what are you doing in crypto? Like, and it could take some time, but I do want to see it eventually. Maybe the institutions push this thing for a 6-year cycle instead of, a 4-year cycle. I don't know. There's too many variables, which is why, I don't love these tools, but I think they're helpful to say, okay, a realistic and a potential target is probably 175 next cycle, right? 250, maybe, but like that's a lot relative. And so nobody knows, but we'll find out when we could use a tool like this, maybe when we do bottom out. That's how I use the tool. In terms of retraces, right? You can say, well, let's just assume, and I really do this, like it's really this simple. You don't need to do, Elliott wave theory. This is wave three of a subset of a wave. Like, guys, maybe for another time. But the way that I would use it, let's say, okay, now I'm looking to see where do we retrace to? So let's assume, let me get the bar replay. I'm trying to like move stuff here. Okay. Let's assume I see this right here. And we've kind of topped off just a bit. You'll notice we have a double top. We're kind of struggling to break high. I'm like, if this thing's going to break down and retrace, more often than not, I just use a horizontal support and resistance. I kid you not. Like that's usually where I'm at. But if I wanted to use the fib tool, okay, to see what could we possibly come down to, I'm taking it from probably these lows right here. 1, 2, 3. Okay. I'm not taking it from the bottom of this guy, to be honest. Just because it's a big old wick. And I've noticed where does the majority of the support look like it is? Here, here, here. Do you see that? So that's where, again, I'm just dragging it from there. Okay. That's the bottom. Where's my top? Right here. Where could we potentially retrace to? Okay. Again, 1 and 2. Perfect. Okay. Potentially down to the 0.5 or the 0.618 in that range, I would say. Okay, let's see if it occurred. And if it didn't, and you get down to 82 and that's it, and it starts bouncing back into the range and, above here, back into a support at 98, then I'm like, okay, that's where I want to start getting in now because it's stronger than I thought. Okay, it's just looking stronger. That's a good thing. That's not bad. That's good. You still stand to make money. And we'll play it out for a second. We don't know. I don't know where it went on this, so let's find out. Notice it almost hit the 5 right here. Oh, it did. Okay, and that was the bottom. And now look, if you miss this move here because you're waiting for the 618, right? The moment it starts to break and put in what? A new trend, which is something that we covered. I remember specifically talking about the 88K range inside of Altcoin Pro University at the time it was occurring. A break for a new range high. Immediately I'm getting back in. So if I miss the dip here, it's okay. I'm buying here. And I stand to make money. Okay. And so in this situation, we came back above the 0.23 and we're starting to pump back up to a prior range high. Okay. But look at how well it respected in this case, the zero point 0.5. Okay. So it's helpful for maybe saying this is kind of where I'd buy, but I would never just use it as a standalone, guys. Again, important to note, I do like to use horizontal supports and resistances, okay, that I myself draw by looking at the chart. Where do we see a lot of resistance? Where do we see a lot of support? And we're going to keep it that simple because it gets more complex the moment you start to get into Elliott wave theory. Waves one, two, and three. Three is always the longest, never the shortest, right? You can have a truncated fifth. You can have extended waves. Like it's too much. And I actually think it clutters thinking. And I know this because I used to clutter my thinking. And I had to move away from it. So, okay, let's dive into a question or two. It's 5 o'clock. How do I set up the lowest and the highest points when applying fib tools? I just showed you. Yup, lost money holding down 50, 60%. It's in a cold wallet. Yeah, this is why, guys, and that's the reality. If your outlook on a crypto investment is not years out, okay, and it's not an investment, like if you're thinking like if you don't even know what your investing strategy is, it should not be sitting in a cold storage wallet. And I get security. Listen, hear me out. I'm not going to talk against the security of it. I think it's extremely important that your crypto, not your keys, not your crypto. Okay. That's for like investment. Okay. If you're going to be investing years out into the future, perfect. If you're committed and you know that there's potential that the market could continue dumping and you're okay with that potential because you're continually accumulating for new all-time highs in the future, okay, great. But I don't typically keep a lot of all of my capital in a cold storage. If I'm not investing one or two, if I'm looking at it saying I'd rather, be able to sell it at some point in time. And so instead I keep my money on separate accounts on centralized exchanges that are trusted and trustworthy, right? That way it's like, okay, even if for whatever reason, like I get it, a Coinbase is not going to collapse like an FTX. They're highly regulated, right? So you're going to be safer there, but also you can actually sell at some point in time. I think that's a dual-sided, issue though, that it might present opportunities for you to, feel some fear in a situation where the market dumps hard and then you sell. And I don't think that's wise. So if you don't know yourself, and you do have an outlook that's multiple years out, it's best not to have access to it in an exchange. For me, that works. It might not work for you. I think that's important to think about. Okay. But I don't always keep all of my crypto in a cold storage wallet at all. I like having access to it, and then I diversify across exchanges, including DeFi. So that way, if I did lose one of them, it's not going to end me. Um, I used Fib a few times on low frame time frames, but didn't adapt it into my trading strategy. That's fair. Let's see here. So 89 and up don't even have them on. Well, 89, if you're talking about the EMAs, SMAs, I don't typically use them, no. Not that you can't, maybe you can find something there. Go ahead and mess around with it yourself and see if there's like actual supports. But by the time I'm at 89, I'm just going to use 100, right? By the time I'm at like above in multiple hundreds, it's like 200. Like that's what most people use, so that's what I'm gonna use. Why? Because the market sees that. So it might operate more as a support than some random fib number that's way too high. Um, do you think the ADX is useful? I don't know. I haven't used it enough to tell you. I could try to find, something useful in it, but I think that would be for another time. I'm not off the top of my head, I can't think of anything that would be bad about it. I just don't know it well enough right now. Um, okay. Do we have any final questions before we hop off? Let's X this out. Let's leave. So I'm, just looking at the chart here, and this is the final thing I will say is I think we need, maybe a couple more weeks, maybe a week of hanging in this range. If we break down sooner than, a month of trading here, that's your indicator the market's really weak. It's ready to just go. If we hang out longer than a month or two, right? Okay, like the market is got some time left in it. It's got some legs, but I'm still betting to the downside personally. And the only way that I would change my opinion is if we could, on a meaningful time frame for probably a week, at least hold any price above like realistically $72,000. And that would only get me bullish, just to be fair, up to probably, I'm looking at this. I think this is, yeah, the 100 EMA. Probably bullish just up to that 100 EMA. So imagine we're here at like 72 and the EMA moves, and now it's at like 79. Like that's, anything above there, like I'd be selling anything above that EMA. So that's where what I'm seeing, what I feel. But yeah, that's my analysis. Now, as you might already imagine, the markets are likely going to continue to trend to the downside. And if you're sitting in spot crypto waiting for that asset to go up, it may be a while before we see another change in the trend or a bull market, which means you're sitting out of the market and likely losing money or time by sitting in stable coins if you're not taking advantage of our accelerator program, which is why I think it's so valuable to check out platforms and programs like Breakout Prop. You can find the link in the description below. In other words, you can pass a trading test without depositing your own money, i.e. you get to trade with other people's money and you risk a fraction of your total account size by paying to take the test. You have an unlimited time to pass and you can keep up to 90% of all of your profits when you pass the test. I recommend going for that 100K account where you can pay the evaluation fee, which essentially reduces your risks to the total amount of the evaluation fee and gives you access to far more capital to trade. Once you pass the test with clear rules and no time limits, you can keep up to 90% of your profits and you can withdraw those profits at any time possible. Also, this company Breakout is in partnership and now owned and operated by Kraken, a very trustworthy name in the crypto space. So be sure to check out Breakout Prop to learn more. And if you're wanting real-time guidance and access to calls like this when they are live so you can get your questions answered, be sure to check out altcoinpro.com to get access to the university, to join our live calls, and to learn how to start trading like a pro. Thanks so much for watching this video, my friend. I hope you learned something new. Subscribe to the channel, and I will see you in the next one. Goodbye.